ladies and gentlemen, welcome to my stream. Just give me 20 seconds, let a few of these people stream into the auditorium, take their seats. Please remember to turn off your mobile phones. Please remember to turn off your mobile phones. Flash photography is permitted in the theatre, provided you do it discreetly. Nobody's ever said that. Alright, looks like we are good to go, ladies and gentlemen. Thanks for tuning in. So, today we are going to cover slippage. What is slippage and how can you avoid it? In today's lesson you will learn, come on, PowerPoint, the definition of slippage. What is it? Why does it happen? Important. How can you avoid it? How can you stop losing money through slippage? I'm going to cover that as well. So, before we get this thing cranking, who am I and why should you care? That is the question. Founded Forex Signals in 2012. Apologies if you've seen some of my streams before and you already know who I am and have an immense amount of respect for me already. Founded Forex Signals in 2012. We've expanded our group now to include a bunch of different websites, all within the Forex industry. The shelf company is called Think Huge. The websites include simpletrader.net, forexvps.net, fxvm.net, thinkhugeinvestments.com. I've also worked and failed as a professional trader. I am a big believer that you learn from your mistakes, and I like to think I am a living, breathing example of what can be achieved if you do that. So I'm not some mega talent that's just made stuff happen out of thin air. It's come from hard work and making a lot of mistakes. But most importantly for this lesson, I have traded strategies that have executed over 2,000 lots at one time per click. Now 2,000 lots, if you're not familiar with the way that leverage works, that's $200 million of positions going into the market at one time. And it's actually on the back of SimpleTrader. So simpletrader.net is our trade copier platform. And back in the day, we used to sell trade copier subscriptions to strategies, and some of those strategies were incredibly popular. We had one called FX Amplified way back in the day, which had up to 500 people following this guy. And some of these people had over $100,000 in their accounts. So every time he clicked buy or sell, 500 people went into the market, some of them with very big positions, and that's how we were doing 2,000 lots. And what started happening was clients were getting slippage, which basically means they were getting bad fills to that trade. So while the main account holder, the master account, might get 10 pips, they were only getting 8 pips. And this started to become a big issue, so I started looking a lot into it. So I come from a position of experience here. So what is slippage? Look at that cute dog. Nothing like dog sliding on ice gift to keep the presentation light and fluffy. Not really though. So slippage is when your trade is executed at a worse price than requested. So slipping from the original order price. Take a moment to think about that. So you put your order in at $1, doesn't get filled at $1, gets filled at a worse price. But why is that? I'm going to tell you. Let me give you a specific example in the Forex market that's going to make a little bit more sense. So let's say you're doing pretty well for yourself. You're buying 10 lots on the euro dollar. And remember, 10 lots is $1 million of actual currency. Actual money, $1 million is what you're trading when you're doing 10 lots. So it's important that you get your head around the physical value of these trades, not just, oh, I've got $1,000 and I'm trading. Forex doesn't work that way. So, and it's the ask price. Remember, when you're buying, you're looking at the ask price. If you don't know what that means, it's okay. It's okay. I still love you. So, live spread at the time, let's say 0 pips. Doesn't happen that often. There's normally a small spread there, but for the sake of this example, we're going to assume that the bid and the ask price are exactly the same. So they're exactly the same. So when you buy your euro dollars, the market is on the other side of the trade is the same. Didn't explain that particularly well. Hopefully it will make sense shortly. Now you check your terminal window and you notice that your order was filled at 1.1701. So you know what I'm talking about when I say the terminal window? The terminal window is the bit at the bottom of your charts if you're trading MT4, which most of us are, which has the order information. So the market was 1.17. You bought, the market didn't move, but you got filled at 1.01. 1.1701. Sorry. Why? Why did that happen? The broker screw you? Were you just too slow on the mouse? No, it was due to slippage, the depth of the market. Now, if you've traded shares, stocks, equities, whatever other fancy name you want to call for a portion of a company, you will be familiar with market depth. And market depth is the market participants at different prices. So the price that you see at the top there, which is the 1.17000, that's what they call the top of book. So that is the best price that is in the market right now. But the thing with the Forex market is you don't get access to that market depth. So there might be only $500,000 worth of volume there. So that's 5 lots. It's not a huge amount in the grand scheme of things. But you want to get 10 lots, right? So that ask price, you see my mouse there? Yes. So that ask price there, you can only get half of your order through there. I've pre-organized an arrow so that you guys can know what I'm talking about. But to fill our order, we need to go both ways. So we need to get the top tier and the second tier here. So we're going to take out half of that value. Remember, we are buying $1 million. And these are all of the people in the market that have said, we're willing to sell you euros, and this is the price that we are willing to give them to you at. Let me give you another analogy that might make it a little bit simpler. So let's say you go to the fruit market, right? And you want to buy 10 kilos of bananas. One guy has his bananas selling at $5 a kilo. The next guy is selling them at $10 a kilo. I'm trying to say this so that it doesn't sound so confusing, because as soon as I put a few numbers in there, it starts to sound even confusing to me. So at the markets, you want to buy 10 kilos of bananas. One guy's only got 5 kilos and he's selling them for $5 a kilo. Now the other guy, he has 1,000 kilos of bananas, but you need 10. You need 10 kilos of bananas. So you buy the first 5 kilos off the cheap guy, and then you have to go and buy the remaining 5 kilos of from the other guy that's more expensive at whatever price he is willing to sell you at, because you want your 10 kilos of bananas. Can I get a thumbs up if that made any sense, please? All right. Thank you. Appreciate that. So let's push on. Another way to see market depth is in the stock market, because the stock market has a centralized exchange. So all the participants in the market can see where the prices are and where the order flow and all that kind of thing is. The position sizing, there is a word that I'm thinking of, but it's not coming to mind. But you can see here, so I've just taken this. BHP is one of the biggest traded stocks here in Australia. And we've got two sides of the market here, right? We've got the buyers and the sellers. So let's say you wanted to buy 10,000 shares. So this volume here, that's the number of shares for sale. So you've got 2,281 shares available at $27.91. But you want to buy 10,000. So what you're going to have to do is you're going to have to clear out pretty much all of these ones down to here. So you're going to get an average of all of these prices to fill up your order of 10,000 shares. So unfortunately in the Forex market, because it's not centralized, there is no one place where everyone goes to do their trading. It's decentralized. So there's different banks offering different prices at any one time, and that's how you can get a spread of 0 pips because your broker and your liquidity provider has gone and gotten pricing off a number of sources, and the bid and the ask are exactly the same. So there you go. So now you understand, hopefully, the mechanics of the market depth and why a trade would be slipped. And when I explain this to people, particularly in our forum, and there was a lot of discussion in this recently, people say, but the market is so big, how can my small little order and our small little signal or whatever possibly be susceptible to slippage? Because the daily volume of the Forex market in 2013, according to the International Bank of Settlements, was $5.3 trillion, US dollars too. So what are we now, 4 years later? I dare say that's probably double. Shitload of money, whichever way you look at it. And as I mentioned before, the spread that you see on your platform, the 0 pip spread or the 0.1 pip spread, that is just the top of book. So that is only the best price in the market. What you don't know is how much volume is actually underneath that price. There's also something that I want to talk about, which is how multiple orders at once can stress liquidity provider infrastructure and broker infrastructure, causing a slight delay, and they strip the top of the book. So let me explore that a little bit more, because that's what you guys are most interested in. The question that you want to know is, how on earth can a small little signal in our forum possibly make any difference to the liquidity in the market, and how can we be slipped on something as big as the euro dollar? Well, it can happen. So this is a more realistic example of what would happen on the euro dollar. You can see here I've tightened it up to be, you know, a fraction of a pip on each tier, and that's more like the volume you're going to see. So if you wanted to execute, what do we got there, 15 million, so I don't know, totaling that up in my head right now, that's 26, 20, so you wanted to do, say, 27 lots, and you wanted to clear that whole book, you're going to get an average of those prices, thereabouts. But let's say the signal that you're following buys the euro dollar, so he gets filled up there. Then we've got 200 clients that are also coattailing that signal, so they are now trying to get their fill at pretty much the same moment. So there's a slight delay, a couple of hundredths of a second there, tenths of a second, and then these 200 clients across the retail industry hit the market wanting to buy. So your first guy gets filled, the second guy, third guy, fourth guy, fifth guy. All of a sudden, market liquidity is starting to thin out here. Okay, the second guy, third guy, fourth guy, fifth guy, market's thinning out. And this is happening in a fraction of a second. So each one of these is maybe a hundredth of a second apart. And this is what happens. Oops. So if you're this poor, not poor because you got $15 million, but if you're this bloke here trying to do a $15 million trade, everybody in front of you has stripped out those good prices, and you just get executed at whatever the market has at that particular time. And in addition to that, brokerage infrastructure is not built to execute hundreds of orders at that exact same moment. Remember, brokers have a limited pool of liquidity that they can source their trades from. So there's about 5 main liquidity providers out there. And these hundreds, or there's probably thousands of brokers in the world now, to be honest, they're all going to these liquidity providers like, give me the price, give me the price, give me the price. And that results in a little bit of a delay, sometimes only, a few hundredths of a second, but you can see the difference. A few hundredths of a second might be the difference between getting that at the 0.17 or getting slipped half a pip. It's just the way that it works. And I'll tell you a story too about how some accounts got really badly slipped for us. So a few years ago we actually had a Chinese investment syndicate, is probably the best way to put it, and they were trading one of our strategies, a very popular strategy at the time. And this strategy traded on the euro dollar, so the most liquid pair in the market. And instead of trading 2 lots, which was the master account's normal position sizing. So normally they were clicking 2 lots, 2 lots, 2 lots. That would then go down to the signals and then go out, and part of that process was to go out to our big group of Chinese investors. The trader on this occasion clicked 20 instead of 2, so he executed 20 lots, so 10 times the normal position. So all of a sudden, instead of, I think we had maybe 300 clients copying plus this $10 million syndicate, that was tenfold. And it was during the Asian session when liquidity was a little bit lower. I quickly pinged the guy on Skype and I was like, mate, is that right? Did you mean to do a 10-time trade? He freaked out, closed the trade immediately. And our accounts, our big fat cat Chinese clients with 10 million bucks, they got slipped 20, 30 pips. There's a bunch of different accounts, but between 20 and 30 pips on the euro dollar in the middle of Asia is massive. 20 or 30 pips. It resulted in them losing, I think it was about $60,000 or $70,000 in slippage. So don't tell me that the market is so big that it can absorb anything, because it most certainly cannot. All right, now I am going to open this up to questions from the floor. Friends, you saying you love this? Mate, I love you too. All right, what else we got here? Juan Sherman, love your videos. Oh, you're making me blush. There is a slight delay, so let me just wait for it to catch up so that you guys know, so you guys have an opportunity to post any questions. And if you don't post any questions, I'm going to take it as a big compliment, because it means that I covered the subject incredibly well, and my analogy on bananas was not lost on you. So, full points. Alright, here's a question. Which broker has the best liquidity? Great question. Great question. That's not as easy to tell as you might think. The broker with the best liquidity is the B-Book broker, because they will fill you at whatever price you want. Hopefully you guys watched some of my previous video where I talked about the difference between A and B-Book brokers. But yeah, if you want to get your trade filled straight away, a B-Book broker doesn't put it into the market. They just take the order straight away and they fill you. But B-Book brokers aside, there's not that much difference between most decent sized brokerages, because as I was saying, they get their liquidity from similar sources. So yeah, like any of the majors, like IC Markets obviously is good. The interesting thing with IC Markets though, they have the tightest spread in the industry, no question. But if you try and put an order in of a couple of lots, like I'm not talking 1,000 lot trades here, but a couple of lots, you will strip out that top of book and you'll get slipped. So by the time you're trading, 3, 4, 5 lots, you're getting the same execution as you would on 90% of the market, I'd say. So they get a lot of kudos for having such tight spreads, but it's also about the execution. And if you're just going to trade a $500 account, then it doesn't really matter, because there's always going to be liquidity there for you, provided you're not copying a signal. However, if you are trading, like the danger there, let me just talk about that. So the danger there is if you're trading a small account, right, and you're doing particularly well, getting really nice fills on your scalping strategy. As soon as you try and scale that, as soon as you try and bring an investor on, instead of trading $1,000, you try and trade $20,000 or $50,000 or $1 million. All of a sudden that strategy doesn't work anymore, because there isn't the liquidity in the market to fill it. So it's fine if you're happy to kick around in rats and mice territory and just trade a small amount of money, but if you actually want to make decent returns, then come up with a strategy that is not so susceptible to these fine elements of slippage. Barnacle saying, my broker simulates slippage on my B-Book, so I still lose. I'd be interested to know what broker you're talking about there, Barnacle. Red Rhino. Red Rhino, one of my favorite people. He's not a fan of MT4 because it doesn't display this market depth. He trades futures, and his comment here is, you need to use market depth to match order size. That means using a platform with market depth. Yes, of course it does, but we don't have that luxury in the spot Forex leverage market, unfortunately. All right, what else we got here? Mark Clifton saying C Trader is better than MT4. Yeah, that's probably true. I confess I haven't actually done a lot of C Trader trading. So yeah, I can't comment in a huge amount of detail, but I know people that trade on C Trader and they much prefer it to MT4. All right, give it another 10 seconds. If there's no more questions, I am going to bid you adieu. Friends, yes, I love it. Yes, yes. Are we talking about Forex here? Barnacle saying he was just joking about his broker simulating B-book slippage and he still loses. You cracked me up there, Barnacle. Just cynical of brokers. Yeah, there is reason to be cynical of brokers. I think there is. In my experience, though, they're not out to screw you. They really are not. They are there to let you do what you want to do, and in the knowledge that you'll probably lose your money anyway. So the ramifications of a broker fiddling around with trades is pretty severe. Pretty severe. And the idea that the broker's there, fiddling around with price, trying to trigger your stop, like, it's not only is it highly illegal, but it's also an incredible waste of time, really. Yeah, brokers are too busy bringing on clients, servicing them, and rinse and repeat. B-book, volume, happy days. Any good brokers for smaller account sizes? Yeah, definitely. All of the brokers that we work with on the Trusted Brokers section of forexsignals.com, I would recommend for small accounts. I'm doing quite a bit of work with Blueberry Markets, who have same kind of spreads as most of the other guys, like your IC Markets, your Axie Trader, your Global Prime, your FXCM, but they have really good service, and I've come to appreciate that a lot more than necessarily getting a 0.0 pip spread. Like, we run a Forex business and I have probably 100 accounts all out there with a whole bunch of different brokers, and I want to work with brokers that make my life easier. And now that the execution and the spreads, there used to be a big thing about spreads, and I've got zero, like, brokers would be boasting about their tight spreads, and it used to be a major factor. Like, I remember when I first started FXCM, for my very first brokerage account, which I subsequently blew, of course, FXCM, I was doing Euro dollar and Aussie dollar trades at 2.5 pips, 3 pips, and then I found, I think it was IC Markets was my next broker, and then they were offering spreads at, a fraction of that, 0.4, 0.5. But now everyone has come to be offering a pretty similar level of spread. So 0.0 on the euro dollar is kind of standard now. So now that everyone's pretty much the same price, how do you compare them? Well, I do that by the quality of service and also all of those little soft things that make my life easier, because I have so many accounts. I need a broker that kind of gets our business and understands how we trade and goes out of their way to help us. Because what can happen is some of these brokers get really big and then they don't really care about you. They ignore your emails, and I find that very frustrating. Fran's asking, is that a broker I work with? It certainly is. I work with, go to forexsignals.com and click on the Trusted Brokers link. Barnacle saying brokers take no responsibility. That is true. That is true, and that's one of the brokers being assholes about your trade calls is one of the biggest gripes, and I know because I've experienced it as well. And that's why the soft things, the customer service becomes so important for me. Because if we refer clients to a lot of brokers, and if a broker is an asshole to a client, it makes me look really bad. Most of the time when you get a bad feel on news or something, that is because the depth of the market, as I showed you before, the gap between all of those different orders spreads out because the major players pull their liquidity from the market. So when you put your order in, there's huge gaps between. So you might get half your order filled up here, and the other half filled half a pip below. That's not uncommon for a fairly small sized trade during news, because the liquidity comes out, and clients get on the phone and they're like, yeah, you bloody stole my money, whatever. But the broker didn't steal their money, it's just the market. But the way that brokers, in my experience, deal with it is particularly poor, most of them. And that's why there's this, that's why there's this opinion in the market that brokers are out to screw you. It's not the brokers, it's the bigger fish and the sharks out there that know exactly how retail traders trade and hunt your stops. This is a competition. Mark Murrius asking, is Pepperstone a good broker for beginners? Yeah, they're good. Easy withdrawals, deposits, tight spreads, nice client portal. I was actually trading on my Pepperstone account just before, so yeah, totally recommend it. Mark Clifton saying, it's good to set your chart to show both bid and ask lines so you can see if the spread is wide, and that is 100% accurate. Let me show you what he means by that. So this is one of my accounts. This is the Pepperstone account that I was trading earlier. So if you want to see the bid and ask, let's go to the Aussie. Properties. There you click ask line. All right, it's already clicked. It's because I'm in the 1 hour. If I narrow down to the 1 minute, all right, the spread there's too wide. Let's find a pair where the spread's a bit wider. Gold, good old gold. Template default. Show ask line. All right, get out of my way. Here we go. All right, there you go. So you see this gap here, the two different lines? That's the spread. That's the difference between these two prices. And that is how you can tell if the spread is widening. So when the market's moving fast, you're not going to be looking at these two numbers and going, oh, the difference between them is 11 pips right at this moment, because you just focused on the price action. So a good way to do it is to show that. Let me show you one more time. So you right click on the chart, properties, click show ask line. And coming into news, you will see that widen significantly. It's kind of cool. Oh, my bloody camera's in the way. That was embarrassing. No. There you go. You can see it now. Anyway, if you see my account, hackers out there. FX Trendsetter. Is it true that brokers have installed robots that guarantee and make sure you lose? No. It is true that okay, let me just think about how to answer this question. Is it true that exists? Yes. However, MetaQuotes, the designers and developers of MT4, they actually, and I'm going off some advice here, so I don't have experience in doing this myself, but I have got this information from a couple of different sources, so I do trust it. MetaQuotes no longer allow this plugin. So way back, probably 2010, 2012, back when Forex was the Wild West, there was a plugin that brokers could use on MT4 that would, I don't know exactly what it would do, but it would manipulate price, or it would, no, that's right, it would slip. It's all coming back to me now. So it would force slip client trades. Totally illegal, totally scumbag thing to do. Totally scumbag thing to do, and I hope those guys all go to hell for what they've done. But MetaQuotes disabled the ability for brokers to be able to do that. So that's no longer a thing. FXCM, I think it was back in 2013, got in a huge amount of trouble, like multi-million-dollar fines, and had to repay millions of dollars to clients because they got caught slipping clients. So to answer your question, yeah, it does. It's happened in the past. I don't believe that it happens now, because the ramifications are your brokerage will probably go under, and they're making plenty of money just by doing their usual business. So to get sneaky and screw clients, I don't think it's happening. And MetaQuotes are aware of this ability, so they disabled it years ago. All right, Marius, how can I get in contact with someone to help me set up my MT4 platform? I'm totally new to Forex trading and am pretty paranoid. All good, you should be paranoid. This is the financial markets. Luckily, you've got someone like me to tell you what's up. Got your back. So if you're brand new to Forex trading, I would suggest going to Blueberry Markets, who we have a relationship with. Disclaimer, they are one of the brokers that we refer clients to, and we earn a referral fee for that. So I want to be crystal clear on that. But they are also very service orientated, so you'll be able to call them up, do team viewer, whatever, and they'll be able to walk you through every little step of getting your account set up. So go to Blueberry Markets, and if you're brand new to Forex trading, you're terrified you're going to lose a whole lot of money because you haven't set your charts up properly, then go to them, because they will be able to walk you through the entire process. Yo-Yo saying, be careful who you trust. That is very true. Alright, so I think Trend said it, does Blueberry work with US traders? They don't, sorry. If you're a US trader, what should you do? I mean, honestly, we'd be happy to help you in the trading room. If you get yourself, like, we work with LMFX for US traders, so lmfx.com, a good brokerage. They're on the Trusted Brokers link. So if you click on that, that'd be wonderful, because then you share in the love and we make a little bit of commission in return for that referral. But they're by far the best broker that I've worked with that accepts US clients. And you know, we'll be able to help you in the trading room with some simple questions if you need it. Happy to do that. And Packer just asking about US brokers. Yeah, LMFX. So click on the Trusted Brokers link. Let me show you. No, I won't. I might put a link on this somewhere. Anyway, Trusted Brokers at forexsignals.com. All of the information is there. The FX plan. This is interesting. Is it live? I can absolutely assure you that this is 100% live, beaming to you from Sydney, Australia. Maris, appreciate the help. No sweats. June saying, I'm new to Forex trading too. I like the videos by Andrew in the Trading Academy. Great insights. Thank you. Thank you for that insight. Sorry, thank you for that appreciation. Andrew's done a huge amount of work on that, and we launched it a couple of days ago. For you, those of you guys watching on YouTube, inside forexsignals.com, we have an academy where we teach new traders the basics of the market and how to implement a winning strategy. So if you don't know anything about it, then come on in. There's a $1 trial for 2 weeks, and then it's $79 a month. But yeah, you can leave after 2 weeks and all you will have spent is $1. What can you get for $1 these days? Not a lot. All right, I think we're done. All right, thanks guys. Well, that is a wrap. Thank you for watching. It's been a blast sharing all of my insights with you and fielding your questions. Be doing a few more lessons next week. I'm not sure what they're going to be, but if you want to post in chat here, give me a few ideas. And yeah, I will see you then. Enjoy your weekend.